I hope you're doing well. Thank you for being so patient. I had been traveling for the last few weeks, and I have a lot of things to share. I have learned many things. Over the last few weeks, I traveled to Delhi, and I got a lot of content related work done. And in the last few weeks, I also created my YouTube channel, Sahil Rumitra, on YouTube, and it has got monetized, which is a good thing because I get to learn a lot more things faster. And in this process, last 2 to 3 weeks, I have also attended about 2 or 3 offline events and networked with at least, I mean, it's definitely dozens of people, but it could be close to 100 people. And it was so I've learned too many things, and I thought that it'll be a good time to just have this impromptu chat with y'all, an informal chat also. That is the difference between this channel Arthigamya and the other channel Sahil Rumitra, is that is first of all the language. I will be mostly speaking in English. Secondly is the in this one, and in Hindi in the other one. The second one is the objective. The objective for this channel is to be for me to be able to practice how to speak in front of an audience, or how to speak publicly, and also to practice how to articulate my thoughts better. And in the process, share my views, which hopefully you all will be able to interpret in your favor depending on where you are in life. So, the first concept that I actually want to talk to you about is financial enlightenment. A lot of people have asked me this question, that if you make money through the markets, then why do you sell courses, or why do you come on YouTube and things like that? So there are two ways of looking at that question. One is that is skepticism. That is the belief is that the most successful trader in the world, or a successful trader in the world, wouldn't waste his or her time coming and doing petty things like selling courses or creating content. That's one way. That is skepticism. The other one is just general curiosity as to why would someone, uh, you know, uh, do things if they are already or if they already claim to be financially okay. So both the versions of the questions are quite relevant, and I just think that instead of giving a yes, no, or a standard answer, maybe I will share the idea behind why I do the idea behind doing things in general, and yeah. So when we're talking about making money, the most efficient way of making money, or perhaps also the only way of making money, is to serve the society. um, you have to serve the society in some way. Someone has to benefit, and it's only then that you make money. So in other words, the money that you make generally is the barometer of how much service you're doing to society. And processes and people and your other assets are basically levers. They help you serve more people than what you could have done as an individual. So for example, if as an individual I decided to teach just one to one, then maybe there is a lesser number of people that I will cater to if I choose another medium. But regardless, the point is that money is the amount of money that you have is in direct proportion to the service that you provide in society. This is my belief. And the nature of service could be anything. It could even be legal, illegal, it doesn't matter. But as long as a service is provided, money is going to be made, and the consequences of making money through that service is also relatively well known. So if you choose legal means, then you will be able to hold on to that money, be safer legally, be a custodian of a process which is accepted by law, by society. And if you use illegal means, then obviously it's much tougher, and higher risks, and so on and so forth. So obviously our view would be that whatever we do in life would be legal, and it should be safe, regulatory wise, and keeping that in mind, we make a plan. Any which ways, when it comes to making money, generally people follow a few stages. and it depends on where you are in a particular stage. So I've spoken about this aspect in the past. I'll just repeat it in a few words. So let's just consider a particular person who has no assets, like let's no home, no car, no nothing that they actually own, and they have many liabilities. They have ongoing personal loans, credit card loans, inefficient loans, as what you would say. That is, loans that are created without liabilities that are created without creating a counter asset. So they are bad liabilities. And also, this person is unemployed or cannot be employed, or does not have an active income source, because they're not employed, so they're not earning money, and because they have no assets, they're not earning any rent or dividend or interest or anything, so they have no income source. So the question is, what do we recommend to such a person? This person could be anyone. This person could be you. This person could be your client. It doesn't matter. All we need to know is how are their assets, liabilities, and income looking like on paper. And to such a person, we would recommend PPF. The reason why we would recommend PPF is because it is the only money that is insured in the event of even bankruptcy. So even if you have loans ongoing for you, your PPF money cannot be taken by anyone to square off those loans. But let's just say if someone has loans ongoing and they own a car, that car can be actually taken in order to settle against the loans. The other thing that we want the person to have is health insurance of some kind, because they will need this for sure. This is something that everyone needs. If not, even the government health insurance is good, but whatever, government, private, they need to have something. Such a person should file for bankruptcy immediately. And it is logical that we will never tell this person to trade in the markets or invest in the markets, because this person simply has no income sources and too many liabilities. And when you have liabilities, your first job is to square off those liabilities. That's the more conservative option. Then the other case is that of a person B who has some assets. Let us just say this person owns the home and thereby has liability. So this guy also has a good liability like an EMI. I would say good liability because it created an asset, but also maybe a few bad liabilities, credit card, personal loans or something, which are used to go against expenses. And this person has only one income source, that is he or she is the active owner. They have a salary. And what financial recommendation we would give would be, obviously we would have everything that is there in group A, that is PPF, health insurance. But because of the many liabilities and the fact that this person owns an asset and this asset can be taken away in the event of default, this person needs to get a life insurance, because this person is the only income generator at home. And they could take away the asset, and the home and the family could be stripped off of their only home. So this person needs to get a life insurance done, which is in proportion to the liability. So if you have 100 rupee liability on you, you want 200 rupee life insurance done. And obviously this would be the key products that this person should get into. There would be no market exposure. That is, you cannot tell this person to come into the markets and trade and things, because they have ongoing liabilities. So whenever you see a person with ongoing liabilities, such a person as a financial advisor of the future, as a financial influencer of the future, as a person whom many people are one day going to speak to, I am confident that this video is going to be watched by only a handful of a few hundred people. And these people are committed towards this industry, and it's just a matter of time that people will reach out to you and ask for advice. Your job is not to give an advice based on the person in front of you. Your job is to put the person in a framework. This is a broad framework. You can work harder and create a more fine framework, and then give an advice in accordance to the framework, which is safe and good for any individual of that framework. Obviously, this person in category B could be destined to be a god-like trader or an investor, maybe someone like a Warren Buffett or trader like Jim Simons or something, maybe. But we still want this person to come in only once they settle off these liabilities. That is when we are giving we are not saying that you cannot become a successful trader someday, but we are just saying it is safer for you to first square off your liabilities and then choose this process, because the risks are so much. Otherwise, you will be adding more liabilities. Let's go to the person C. Now this person has a home. He has or she has one asset. This person does not have any liabilities, which means the home is entirely theirs. There is no ongoing loans, and such a person has an income source, but it is just one income source. So obviously, once this person does not have any liabilities, in that case, we want the PPF and the health insurance, but we do not want the life insurance, because such a person does not have liability. And if you don't have liability, why do you need a life insurance? You just want to make long-term savings. And here now the market exposure for such a person will begin, and my recommended product would be the national pension scheme, because it is really good, it is really low cost, it's going to do very well. It's government owned, privately managed. It's the ultimate combination for long term investments. And one could study this in greater detail and consider taking national pension scheme. And obviously, when you have just one income stream, you're going to evaluate your life and try to create more income streams. That has to be the purpose. So when you meet a person who is in category C, if such a person shows interest in trading, shows an acumen for trading, shows an understanding of the subject, then yes, such a person should consider taking up trades. But obviously, the capital that you trade with and the demat account that you have is a function of your income actually. Let's talk about the person D. Now, such a person is what we would call financially well off, and this person has many assets and there is no loan ongoing. Such a person has a home, a car, and everything, but they do not have any EMIs or anything to worry about. They own everything. And it is only going to happen when they already have multiple income sources, and multiple income sources could be through trading, it could be through rental income, it could be through dividend income, it could be through interest income, it could be through a business process that they either partner or own or something of that sort, or many businesses for that matter. So when a person is in category D, this person is basically what we would call financially free. But financially free means what? Financially free means this person is responsible now to keep creating new income sources, because I'll tell you about it in a bit. This person is the only person now whom we would ask to take risks. You need to take risks, otherwise you're not going to grow. And such a person's key role is to serve the society. So I'll come to this point. Now, I'll just add this little bit here. We all know of two classes of family. Let's just class A. Now, class A family is a family which was extremely wealthy in the past. They were extremely wealthy in the past. They had a good business, good everything. But today they are, let's say they were worth tens of hundreds of crores, but today they are just worth, say, 10 crore rupees. And let's just talk about class B. This class B was extremely poor in the past. Let's say 30 years ago, they were extremely poor. And today they are also worth 10 crore, which means that class A, class B families, we are just giving examples here, are today having the same net worth, let's say 10 crore rupees, or 100 million rupees, however you put it. Now, the thing is that if you look at this, now the thing is that this class A, this family which was extremely wealthy in the past and has lost wealth and reached 10 crore, you will see that their families will quarrel. There will be disputes over property. There will be disputes over businesses. The families will start splitting apart. There is less unity. There is more competition within the family itself. Whereas this class B, which was extremely poor, all of a sudden, not all of a sudden, but over the years reached this net worth. Such a family would be much more united. They would be more cooperative. They would have more cordial relations with one another. And the reason is because if you're making more and more money and you're doing it through honest legal means, generally you are also becoming more moral, and you're becoming a better person. And when a cluster of people start becoming better within the same family, then the odds of them getting into unnecessary quarrels significantly drop. They're very direct with one another, they're very polite with one another, and they typically have a clear plan of what are they discussing, what do they want out of it. They spell out what their aspirations are very clearly, and these things are factored, and therefore the family works in as a stronger cohesive unit. And because they're in an uptrend and the subsequent generations see this, it is more likely that this family is going to reach 100 crore rupees than the family A in the next couple of decades or whatever, depending on many other factors. So a point being that if you are, it doesn't matter how much money you have. It doesn't really, there is no specific amount in the balance. The question is, what is the trend of your personal finance? if the trajectory of your personal finance is upwards, you're typically doing really well. Whereas if your trajectory is downwards, you are going to struggle. Now, coming to this, how do we get our trajectory upwards? The Like I mentioned here, that you have to keep creating new income sources. Okay, you just have to keep creating. So for example, if today trading is my income source and I'm a professional trader, so it's not done actually. Now what is the next income source? So I will evaluate my personal life and I will ask myself, okay, can I set up a factory? Like, can I set up like a steel factory or an aluminium factory, or how about something in oil and gas? And the answer is impossible. I cannot set up anything like that. I can definitely not set up a factory. I could not even set up a factory to create matchboxes, which is just sold for 1 rupee. I simply cannot do that. So creating a factory is out of question. What about shops? Like, what about B2C shops? So first of all, I'm not really a person who stays in the same city. I don't enjoy that. So I'm unlikely to be the person who goes at say 7:30 or 8:30 or 9 a.m. to go and open the shutter of the shop and then close the shutter of the shop. That's just not my personality. Secondly, I can own a shop, and maybe I can even fill it up with inventory, but there is nothing that I feel so strong about that I want to sell B2C in that category. So I can do it, but I don't want to do it. I mean, it's not to say that retail is not a good business. Retail is a great business, but you also need to be a good businessman to be able to survive there. I don't have that kind of acumen. I don't have that kind of aptitude and willingness to do it. So therefore, it's unlikely that I will set up like a Kiryana store or an FMCG or an FMCD or a jewelry store. Even though I am a gemologist, even though I am qualified for the subject, I just don't think I can do it. It's really, really tough for me. Now, another thing that I really think about when I'm creating new income sources is that how much is the downside. So the thing is that because of trading, the luxury that I have is of time. So I can actually afford to give time to things. But what I don't want to give is money. I don't want to lose money on a process. Like, I don't want to just explore. There are these category of people who say that entrepreneurship, I'll keep trying. I failed they write in their resume 7 times failed entrepreneur, as if it's something to be proud of. I think it's something to be ashamed of. I mean, if you are failing 7 times and still doing something the 8th time, I think there is no better description of stupidity. And also, what is the message? I mean, you are simply not taking a risk worthy enough, right? Because that is the reason why you are being able to take so many risks. You're not thinking it through. That's my opinion. It's too shallowly thought. So now when it comes to creating new income sources, I obviously, because I've spent a decade or so trading, so trading becomes the base. And now the question is, how do I create it? I have advisory license, but it is filled with complications actually. And then there is this education. Like, so what happened is that Upsearch contacted me through LinkedIn, and they just simply proposed a podcast. And from that podcast, they offered that, why don't you create content for us? And we sell it. And initially I was very skeptical, but then the question that I had to ask myself, which my dad asked me, is what are you losing in this process actually? And the answer is really nothing. I mean, I'm just losing time. If I work with a group of people who are inefficient, I would have wasted a lot of time. But when it comes to money, I'm not paying anything, and so I'm not losing money, which meets my criteria of actually income source creation. And what I experienced in the process is simply not what I actually got. Like, I just thought that all of this is going to be about creating an additional, say, 10, 20, 50,000 rupees, or maybe even 100,000 rupees a month if it's all good. But my takeaways were far beyond that 100,000 rupees. I mean, I can assure you, actually, what I have learned is just incredible. First of all, though, I learned how to confront better. Whenever you are in front of a camera with lights flashing on you, you're so conscious about how you look. You feel so terrible about how you look. All this having chocolates and ice creams and late night cold drinks and all of that. You just feel really guilty when that is coming on camera. Then the next thing is your throat starts drying up, your heart starts beating faster. Even if the setting is so familiar, it's just unbelievable that how every time before I have to speak, my hands become cold. And so that is the first thing. The second thing is just the pressure. I mean, there is a pressure of being in front of an audience and talking in front of an audience. And over the months of doing it, I mean, I just think that my personality in general, I just started doing much better. And I did it with the objective of creating a good course, or adding value. Like I said, that we have to serve the society in order to have an uptrend in finances, which means what is generally good for society is also good for you. I was committed to that cause, but I benefited. I mean, far beyond money. I mean, I don't even know like how much money I'm making in that process. But what I do know is that I'm meeting just incredible kinds of people. My students are different. I mean, some of them are very affluent. Some of them are pandits. Some of them are doctors. Some of them are army soldiers. I mean, the armed forces personnel. They're from so many walks of life and from so many different cities that wherever I go, I almost always feel welcome, which is just incredible. When I started doing this, I get noticed by a lot of peers, not through this channel really, but through other mediums. I get noticed by peers. I get recognized in events, which is just again, I mean, I walk into an event and people like know who I am, which is just incredible. For me, I never knew that is even possible. Then you meet so many business owners who are looking to distribute their services, and you're given so many proposals, and you're just evaluating them, and all of a sudden life has so many choices in front of you. You have so many choices, and that it is so easy to make a bad choice unknowingly. So you are looking for advice, and you're also looking to you're looking for so many other inputs, and all of a sudden life has become a lot more vibrant with so many choices. The next thing was obviously when I created the YouTube channel. There was actually initially no intention to create the YouTube channel. I was not too keen on doing it. I thought that this is fine. All the students will eventually get the link to this channel, and it'll be a good revision. But the decision was taken to create a YouTube channel, and Team Upsurge decided to help me with the production, with the editing and everything, uploading. Even Dhan basically supported in this process. Dhan is a broking company. Now all of a sudden I'm not risking anything except time, and I just decided to work, because that's the only criteria I have. Don't risk money. I mean, it's okay if I end up wasting some time, it's okay, but don't go and just give away like 50 lakh rupees, or give away 10 lakh rupees to build a website and then just not know what you're doing. That's just very painful. Actually, you are wasting money and time. And so this again met the criteria, and with absolutely zero expectations, we started off with that channel, and the channel ended up getting monetized in like 15 days, or 20 days. There is 4,000 hours and 500 subscribers which are required, and that was met in like first 10-15 days itself. And yeah, at this point in time, what's happening is that 20 rupees, 50 rupees, 100 rupees, 300 rupees is what I get on a video basis, and which is accumulated at the time of recording to maybe 1,000 rupees. But now that's just created a new income source, and the source is YouTube. Now YouTube can give you 1 billion rupees, I mean, if you are really up it. And the fact that it was not there till a month ago and it is there today, and even though it is just 1,000 rupees, the thing is, it is infinite potential. And again, what am I risking? I'm not risking money. I'm only risking time, that I end up creating something and I end up wasting time, and it doesn't do well, or it's not accepted by the audience. This is the only risk, right? And when I created that channel, it quickly reached like maybe 1,000 subscribers, 2,000 subscribers, and I left for Delhi. And once I left for Delhi, for a few podcasts, I just simply got so many opportunities because of this channel. I mean, it was almost like the few hundred people or 1,000 people who were viewing the channel were in front of me, and they were all in the business of content creation. And they just simply gave me many opportunities came by once again because of that. And all of a sudden, I'm in this industry where I'm meeting camera person, creative directors, I'm meeting public speakers. There are individuals who come up and speak publicly, introduce you to other people. I'm meeting PR agencies. I'm meeting content creation companies. I'm seeing their business model. And all of this simply because, some time back I decided to teach students, and then, maybe a month back we decided to go YouTube. And the learning is so much. I actually see my YouTube analytics with as much interest as I see maybe stock charts, like the graphs that are created in YouTube analytics. It's so enjoyable, that process. It's not about seeing growth, but it is about measuring so many matrices. How many people are leaving, where are the spikes, if there are spikes at all, how many people complete the video. The learning is incredible. So now what's the point? The point is this, that financial enlightenment is not a value in your bank account. Like, there is no value that is there in it's not like you need to have 5 crore rupees and then you're financially enlightened, or 50 crore rupees. What financial enlightenment means is to identify which person are you. Are you this A, B, C, D? Which person are you? What is your current balance sheet? And whatever is your current balance sheet, that governs the role in society. So if your balance sheet is in desire of stability, like you need to have an income source, your role in society is to go and take up a job, because you cannot risk capital. You can only risk time. And let's say even if you are in category D, like you could be in category D like me, which means that I actually have a home, I have a car, maybe I have some jewelry, maybe a few things more, but I don't have any liabilities on me. And I do have an income source like trading. I do have like maybe interest and dividends and some rental. But this same category D is also maybe perhaps Mukesh Ambani, right? I mean, Mukesh Ambani is also category D. Many assets, no real liabilities on him as person, I'm guessing, and many income sources. The difference is that Mukesh Ambani and I, we both need to create income sources, because we need to be in class B. The family needs to keep growing. Otherwise, there are going to be petty clashes and loss of moral values. So the growth requirement is whether you are Sahil like rich, or whether you are in category A, B, C, or whether you are in category D, the same category that I'm in, but you're like Mukesh Ambani or Azim Premji or Narayan Murthy or someone. It doesn't really matter. Growth is required because you need to compound skills and value. Without that, growth is not coming, and you need to serve people. Now the difference is going to be how we choose to serve people. So if I want to serve people, I cannot risk capital, I can risk time. So I will maybe create a channel. But if say Ambanis want to serve people, if they do not risk capital, they're simply not going to grow at a value which justifies taking that effort. So they need to risk capital. So they cannot start a YouTube channel. They might simply have to start YouTube only. You're understanding? Now, if creating a channel and operating it is so much work, just imagine what it will be like to create a platform and to operate it. Just imagine the complexity, and just imagine the capability the person needs to have in order to do that. And if in creating a channel I get, let's say, these many units of exposure, imagine what the exposure would be of the person who's creating the platform. So now the question is, if I want that exposure of the platform, should I go ahead and instead of creating a channel, create a platform? I think it's too risky, right? Don't you agree? I mean, I'm slightly risk averse. I take my risk in the futures market. I don't want to go around taking risk everywhere in my life. कि चलो YouTube से ही compete करते हैं. Rather it is just better कि मैं अपना channel बनाते हैं, और जहाँ से कुछ नहीं आ रहा था पहले, अगर वहाँ से 100 रुपये भी आ रहा है, it's not bad. क्योंकि जहाँ से 100 आता है वहीं से 10,000 आता है, वहीं से 10 लाख भी आता है. It just, I mean, it's showing. Now I'm not saying that this is going to be success, like the channel is going to be any success, because there are many factors in it. But what I'm saying is that it's given me a potential to look forward to. So with that, I wanted to share about the concept of financial enlightenment, that you have to identify where you are and take decisions in according with it. And it's not like you are or I am special. Like, we are somewhere in this category. Even within this category, there are spectrums. Within the category, we are in a certain spectrum. We just have to assess what is our balance sheet, what is our capability, what is it that we are not willing to do, what is it that we potentially can do, and then take a decision which we have to stick by for some time then. So this is about what I have learned, and I'll just try to discuss some questions. that have been unanswered for so long. I'm so sorry about that. So Saurabh is saying, waiting for stock analysis series videos. Perfect. I might do it, and I will definitely share this. Omkar obviously sent a message waiting for a video today, but like I said, I was traveling. I didn't want to carry the webcam, the mic, and everything, so I just took the laptop, and the laptop does not create good enough sound, so I didn't want to create videos like that. Tariq is saying, a pleasure to learn from you on Upsurge, so thank you so much. And thank you for your kind words, Tariq. I'm very happy that you find value. I'm really happy about that. Ganesh is saying that he enjoyed the assessment of the markets, and this was obviously last month. Again, Ganesh has been very kind and generous with his comments, so I would like to thank him, and I will reply to these comments, but maybe in some time. Kopal, I think, is saying, what about SL? So Kopal, and this is for a long time back video. So SL is a separate subject. I have already created a video on it, on good SLs, bad SLs, and how SLs essentially determine your quantity, and so which means that if I have quantity on position, typically I already know where the SL is, and if I know where the SL is, it is kept. So if the SL is there, I will exit. And my system, like I told you, has around 35% accuracy, so there is no question. So if you're seeing gains of 1 lakh rupee in general, then the SL cannot be 1 lakh, it will be close to 30,000, 35,000 rupees. Shailesh is asking for his Kundli assessment. My request is to find an ideal life partner and preferences I should look out for. So 92, so he's about 33 years old and unmarried. So Salish, I will analyze your Kundli maybe sometime. I just have some pending tasks, but let me just tell you, set up your Kundli, see your 7th house, see who is your 7th house lord, and chant their Bij mantra. So for example, if you're Aries ascendant, your 7th house lord will be Venus, so chant Venus Bij mantra. And for example, if you're, I don't know, just giving a random, if you're Virgo ascendant, then your 7th lord will be Pisces, Jupiter, so then chant Jupiter Bij mantra. That will be addressing the 7th house is essentially addressing the house of partnerships, and marriage is a form of partnership. So without any without getting into the specifics of it, now ideal life partner and preferences. Now the thing is, once you have addressed the 7th house lord, then you have done your job. Now whatever is your ideal partner and preferences, we will assume that you do not know. Neither would I, obviously, if you do not know. There will be certain characteristics, but you're going to get that from the Kundli. But the best version of that characteristic will be a direct function of the time you donate in chanting to that Lord. So I think just check out your horoscope, check out what is on the east, find the 7th house Lord, and just chant it like thousands of times, because you should. Thank you, Shobha. I'm not sure. NRJ is asking which SEBI book should be read for RA. The answer is that when you generally go into the NISM site and pay for the course fees, you're given a book as a download. That is the book for RA, and also there is this website, Pass for Sure, which will have previous year's question papers and answers. You can go through that as well, and that will be very useful. Shubh Ram is asking, sir, with a large capital like yours, what percentage return should one expect? So Shubh, I don't expect any percentage returns. I really mean it. I don't care about the percentage returns at all, because it's not like if I just made 3% in this year, I would quit trading. I like I told you, or like I've said in the video earlier, it's not like we have infinite choices. 10 years have been spent into it. So percentage returns don't matter. The question is, what is the quality of trade? And I feel like I'm going to get better at trading. I always feel like that, but this time I'm feeling even stronger. I feel like the market is going to be more favorable for my kind of trading style after some time. So I'm optimistic about the future actually, but I do not know what to expect in terms of returns. And market is, for me, it's like a version of God. And if God decides to give you something, why should I give it a percentage number like 100, 500, or 10,000? If it's in what is there is there. My job is to control the risk, and I think I do that. And let's hope that that part of my trading is not tested. What is tested is how much I make. So we'll see. What is the percentage of return you expect from your system? So I've just shared my perspective on that. And with increase of capital, are you decreasing your percentage of returns, or are they the same? So my percentage returns, incidentally, they have not decreased by that much. But my willingness to, because what happened is that as my capital increased, I kept scaling the system, but I kept doing that by increasing watch list. I was not increasing quantity. Now when I started increasing the watch list, so I started getting in more and more positions. So I got two aspects. One of them is diversification, and the other one is direction. Only in the event of systemic failure would increased diversification fail. So I got even that in the month of October 24, basically till March 25. We had systemic failure in the market, so I gave away a lot of my gains actually of accrued till that year, which is fine. Since then, the market has been okay, nothing too great, no real strong moves, but I mean, it's okay, nothing too fantastic. It's just flat for me. Even though the market has risen, but we are buying a breakout, and after buying the breakout, if the stock gets rejected from a resistance, you actually don't really make money, even though you were in a decent trade. So my percentage returns on a capital basis, I do not think has decreased by anything significantly. And because I'm not thinking about percentage returns, I actually only think about absolute amounts. Which means if my account is like 5 crore, and if the only amount that I'm worried about is not losing 50 lakh for the year, then I'm happy in making in multiples of 50 lakh, and it doesn't matter that it is just 10% of the account value. Because whenever I'm going to calculate my returns, I'm going to calculate my returns based on my investment, and my investment is zero in the market. So I don't need to calculate returns. I just need to make sure that lifestyle is maintained. And I basically, what I do is I keep withdrawing money from treasury bills, and like for example, an average of say 50,000 rupees every week. And if the account doesn't make 50,000 rupees every week, over a period of time, more money will be withdrawn than what is in the accounts. And as money keeps getting withdrawn without any addition, automatically trading systems will keep getting reduced. Whereas if suppose I keep withdrawing 50,000 rupees each week, and then there comes a month wherein I make, I don't know, maybe 20 lakhs. Now, if that happens, then all of a sudden many such weeks are now covered. Almost 40 weeks are covered. Nearly a full years of investment is covered, and I don't have to worry about the account size. So I'm not thinking in terms of percentage returns. I actually don't really care about it at all. I mean, if it is your money and you love it, you don't want to risk it also like that. I don't want to get into a situation where after 10 years I gave away everything, and that'll just be really traumatic. So since I can't afford that, my constraints are different. And but the growth rate, I just simply don't measure it, so I'm not very good. But I don't feel like I'm slowing down. I feel like it's all in absolutes. The absolute amount that I'm thinking about, it's in check. Yash is saying, I have a question. If I compare a stock from its parent index or sector, then how would I know which one to choose? You as a trader want to choose a stock which is stronger than the sector. So if the sector has created a new life high, your stock must create a new life high. If the sector's last pullback was still the 50-day moving average or the 50-week moving average, your stock's last pullback must be higher than that. It should be higher than 50-week moving average. So which would mean that your stock should be stronger than the sector if you are looking to trade. That means you are looking to hold it for anywhere for a few days to maybe a year and a half or so. But if you're looking to invest, then in that case you are looking for value. You are looking for sectors which have plunged. So I think the small cap or Nifty IT is a better sector. Even Nifty Pharma could be a reasonably good sector for value, but momentum would be Nifty mid cap or Bank Nifty or something like that. So I want a sector which is, I want a stock which is stronger than its sector. Which index should I choose? Now see, if you're doing a sectoral analysis, you would have done a sectoral analysis, let's say of Nifty Healthcare Index, and then gone down to select IPCA. If you do that of of Nifty Pharma or Nifty Midcap 150, if you do Nifty Midcap 150, then this stock IPCA Laboratories needs to be the best in those 150 stocks or in the top 10 of those 150 stocks. Whereas in healthcare index, maybe there are just 10 or 15 stocks, and this is coming in the top 10, 15 by default. So if you do a top-down approach of broader market or sectoral market, this is a decision that you have to take. Would I do it? What I have done is basically I just simply have this huge watch list. So I just look at a stock at its merit. Though I know the correct thing to do is to look at the sector and then go downwards, but I don't do that. I just focus on the stock chart personally. Chiranjeev Thakuria says that I would appreciate if you could throw some light on your capital allocation to one instrument while building positions. Capital allocation to an instrument. So, let's say, for example, if I have 50 lots in the market, I feel like it's okay. There's nothing to think about. So, which would mean that 1.25 crore rupees positions are normal at any point in time. But if I have 150 lots in the market, then I think I would be at the edge of my seat. So I'm guessing about 2.5 crore rupees would be the allocation of futures. Then everything else, like another about 2.5 CR is into debt. And what that debt does is I do not know how much it gives, but maybe 15 lakhs or something a year. And which means that every 3 years I'm getting approximately, let's say, 50 lakh rupees. So over a 3-year period, if I lose 50 lakh rupees in FNO, I would break even basically, because my debt investments are coming from my FNO gains only. So that is how I actually plan. I don't expect to lose 3 consecutive years. Maybe I could lose a year, but then I don't want to lose more than 50 lakh rupees because that'll be really bad. So that's just how I plan. And equities basically, there are so many options when you're doing equity, so many choices. How should I go about it? Should I do a SIP method, or should I do a momentum method or a value method? And then you want it to be in a method that is not conflicting with your future style. Do I want to have 3 more systems into the market? So this we'll cover. I'm also in the process of making decisions, though I have applied some things, but let's see how that happens. Ketan is saying that his positions are similar to mine, but his holdings are in red because his entries are not deep enough. With practice, Ketan, it will come. Don't worry about it. As long as you are in the right stock, then a little bit of a adjustment in value will not matter over the long run. Ashish is obviously referring to a video that he is saying कि scroll करते हुए video देख के मुझे लगा इतना पैसा वो अर्थिगम्या वाले सर ही बना सकते हैं, फिर चैनल का नाम देखा तो सही निकला. That's correct. So basically what I would like is that whenever I do some of these positions, don't look at the P&L as much as just look at the entry and ask yourself the question, would you have bought this stock at this level or not? And what would be your SL? It's just a case study. Simple Admi has said, sir, as you mentioned, the breakaway gap has created near, okay, this is, so this might just be a normal up move as bullish move has already been started. So if you're talking about, because the title of the video is Nifty could get very bullish, so see what is happening is that I'm seeing Nifty creating like new at the top of a range on the monthly, and the Nifty trend is up. So the expectation that I have is that it will break the range high and create a new high. But the range high is 26,300, but as you can see that all these values are happening at 22,920, 2300, 1200, etc. So these values are really low. And now the question is, what happens? First of all, can Nifty reach 26,300 and can it even break it? So therefore, the feeling is that it can, and therefore when I see daily assessment charts which support any kind of long bias, I take it because it's consistent with what I've done on the monthly. Failed trader, that's a very humbling account name, says thank you, and I appreciate him saying that. He has a question: what are the best instruments that we can use for cash component for pledging? So I don't pledge my positions ever. I know there is this thing going on, you pledge your stocks and write the options, or pledge your stocks and do FNO trading. I don't know, it just doesn't sound good to me. I do not know what are the specifics, but somehow I just can't pledge. I would get a lot of margin if I pledged my bonds. I don't want to pledge them because there's some 1 in 10,000 risk that something can happen, and I can't afford to lose that. Suraj's question is, what are the benefits of an RAIA? Basically, the best person to ask is Avdut Sathe. He could have saved a lot of money if he had that license. And it is basically useful for people. So first of all, I'm not being sarcastic. I actually feel sorry for the person because I know that a lot of people are celebrating, celebrating the penalty on him and things like that. But let me just tell you that, I have never made Maggie in 2 minutes. I made Maggie hundreds of times. But which means that what they claim on marketing is not really happening in reality. But no one can take away Nestle's revenue from Maggie of say 1 lakh crore in the last few years as penalty. Taking revenue as penalty is just unprecedented. Now the other aspect that I want to make is that, let's just say if I'm fat, right? Obviously I'm what you would call obese. But it doesn't mean I cannot give someone health advice. It's just because I'm obese, right? I can definitely give you advice, and now it's up to you. For example, I can tell you, do yoga, do deep breathing, go for a walk, do a cycle, do swimming, play badminton. Maybe I'm giving that advice to myself, but I could be giving this advice to my children, to my family, in their best interest. Is it the best advice in the world? That is another decision, but it's an advice. I am not a doctor, but still I can give that advice. But let us just say I start giving technical advices. Now, in such a case, what is the penalty? I think that penalty needs to be defined well in advance. The penalty cannot be someone's revenue, which means that if my revenue is 2 lakh rupees, you charge me 2 lakhs, and if someone's revenue is 200 crore rupees, you take 200 crores. I think that's unfair, because what that does is it puts in fear in the person whose revenue is 2 lakh rupees, that what if I get to 200 crore rupees and then they find out some gaps in my process and take away everything. So it cuts down the need, or it makes all of a sudden the whole business becomes 100 times riskier, because you are now unlimited liability in this game actually. And someone like Avdut Sathe, I do not know if there's something criminal. I'm not defending him or anything, but I feel really bad for him. I feel bad because I feel like someone in his mid 40s, he's just maybe a little older than me. He would be having a family, like what they did, they don't just penalize him. They went and posted that he lost 6 crore rupees in the market. Do you know why they did that? Why would someone post someone's P&L openly? They did it to humiliate him. They did it to show that he's actually a losing trader. Okay, that his losses are 6 crore rupees. But they could have also not shown those losses, by the way, and still, they could have just done things professionally, like how it happens. Send a notice, ask their lawyers to come, but it became a spectacle, and this is very defamatory, actually. So I think that he's going through a bad time. It could affect his health. It could affect his standing in society. It could ruin him financially, actually. And I don't think so. And there needs to be a distinction. There needs to be a distinction whether Avdut Sathe gave someone advice or his employees gave someone advice. An individual entrepreneur cannot control people, and that gap needs to be understood in Indian business context, that the owner cannot be held accountable for everything that someone else has done. Because if the accounting is unlimited, then in that case it is just best that SEBI also creates a job portal wherein we hire people from that portal, and their market rates should be at the same market rates that are available. Now if the person goes and does something despite, he can simply say I won't do it because it's illegal, because that person is qualified, and if still that person does it, then SEBI cannot pass on that ownership to the owner. Now, because the thing is that research analyst licenses are given to individuals at a cost of say 10,000 rupees, whereas a corporate RA license could cost you 5 lakh rupees. It's not everyone's capability to just pay 5 lakh rupees for a license. I mean, come on, why 5 lakh rupees? Why should it be 5 lakh rupee? If you meet the criteria, the individual should be a corporate RA so that the liabilities are not unlimited. So I think that that this industry, that's one of the concerns actually. That's one of the concerns of committing to this industry. And what is the bad thing? Like, so for example, I tell you buy Reliance and Reliance doesn't work, so you penalize infinitely. I do not know, that's just too cruel. It makes less sense. So the questions of what are the benefits of RAIA is, the benefits are that you'll get away in some events, and you will also be able to conduct some business processes more safely. That's the benefit. Rahul is saying, सर आप अपने ट्रेड्स का प्रॉफिट कब बुक करते हो? यूजली एक्सपायरी पे राहुल. जैसे आपने 4 ईयर अगो SBI के एक लॉट पे, या दैट्स करेक्ट, आई डिड मेक दैट. तो SBI का 1 lot was closed at expiry and 1 lot had a partial target to it, and the expiry में SBI closed at its high, so I made some money. Omkar is saying that market 18th expiry trend closing at the same level. Whenever this happened, market has shown sharp rally in the next. No, which 2 expiries are flat, so therefore the third expiry will be volatile. It's a hypothesis, Omkar. We don't predict. If today's monthly expiry low is 25,850, defend it tomorrow, which hopefully we will see new life high soon. Fingers crossed. Yeah, that's correct. Markets are likely to form new high. Really, we are in the direction of the monthly trend, but we don't do that. We just simply take up long positions on a stock that has dipped and put an SL and do it for as many stocks which qualify the setup, and hope for the best. We have no concern about this. So I would ask you to just relax it. Don't bother about where the price is going to go. Just focus on your own quantity. Saurabh has made a comment on an astrology channel. So Saurabh, here we are talking about Gemini ascendant, and okay, it'll take you some time. Particularly if you're not a Gemini ascendant, then the video has less relevance for you. But you'll definitely, I'll make enough content on this topic. And thank you for your kind comments, Saurabh, where he's basically mentioned that he feels that my explanations are easy. Yeah, so he's asked a question on reference material for understanding between constructive pullback and erratic pullback. So when it is pullback, what we are basically doing is, yes, we are looking at the waves that they're forming, whether it is a lower top, lower bottom, or a lower top, double bottom. That's one thing. The other thing is that where does it go and stop? Does it stop at Fibonacci, like 38% or 62%, which means 38% is a strong bullish. It's like a pullback of a strong stock. 68 is a pullback of a weak stock, and 78-100% is obviously almost double bottom. So which is a range. So I wouldn't call anything erratic. I think if the range breaks, like if the pullback is 120-130%. Then in that case we will be trading harmonics. So there is nothing in that context. It just is a question of whether you are a harmonics trader, or whether you're a double bottom trader, or whether you're a bullish strong or a bullish weak trader, or whether all of them. So accordingly you will have to create a trade plan which will be complete in all its aspects. So that's what I would recommend. I think we'll stop these questions for now. The video has been long enough. Thank you for your time and patience. I hope we have learned something new, and that the content has added some value. I'll see you obviously in the main channel, Sahil Rumitra channel, and in subsequent videos as and when I get time. So thank you for your time. Take care. Have a good day.